Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Since yesterday the market hasn't shown any significant action and mostly our analysis on euro currency and the British pound stands intact and valid, I have decided to update our view on the Canadian dollar since we haven't taken a look at the Canadian approximately for the months. So maybe right now there are some changes that probably is worth of our attention, and we'll discuss them today. So in the beginning, I would like to say that our long-term view stands valid, and the action that we see right now the Canadian dollar just mostly confirms our former expectation. Just to remind you, we expect to see that the Canadian dollar will reach 134.70 area approximately. So we think that the Canadian dollar should continue to stand on the weak side, and it's become weaker. And the currency pair is USD CAD will continue to move to the upside. There are some fundamentals and background for that, so if you would like to know the details, you could read our weekly research. Just in the two words, the crude oil prices, the CFTC report, the strength of the dollar, all of these factors point and support the further weakness in the Canadian dollar. From the technical point of view, I will try to combine the former analysis and current analysis just to remind you what we have expected to get, how market has behaved since then, and why that just will let you to understand better why we make the particular conclusions based on recent actions. So recall our former analysis. That was the double repo sell on the weekly chart. And this weekly and this pattern hasn't quite reached the 50% support, this target of the double repo, and turned to the upside, mostly because market has met the weekly oversold condition. And our major concern in the previous analysis was around this upward action. We said what this action is. Either this just reaction on the oversold and market later could show this ABCD action, or that's upward continuation, because our monthly analysis point on the 134.70 target, and market could behave differently. It could, for example, show ABCD action to the downside and then turn to the upside, or it could show just reaction on the oversold and immediate upward continuation. And recall, maybe you remember, somebody of you remember our former analysis. We have traded this pattern. We said, take a look. This trend line takes the exceptional meaning for us, exceptional importance. And right at this trend line, market has formed last time when we have discussed the Canadian dollar. It has formed the double repo sell pattern, right at the important trend line and a daily overbought. And we said, guys, that's the brilliant situation, because here we could take the short position with the strong background, since that the trend line overbought, double repo sell, and we could get at maximum ABCD retracement down that will be really deep, and that will promise us significant dividends. But if even market will not complete this ABCD, because on that moment we didn't know whether the market really will continue to move lower, or it will turn to the upside. But if market won't complete it, we probably will be able to move our stop to the break-even, because this really strong resistance and market should show some bounce to the downside. Since then, we see that this really has happened. Double repo, by the way, has worked excellent, so that analysis just was very, very good. And this has given us real success here. So the double repo has completed its target, so it even has reached the 618 support of the thrust, because we know that the double repo usually has the minimum target at the 50% support. And it has been completed, but at the same moment, right now we are going to current analysis and the modern analysis. At the same time, market hasn't continued with this downward ABCD pattern and turned to the upside. And that is the crucial moment for our analysis. Why? Because if market was really bearish, it should not show such sort of action. Because if you'll take a look at this ABC top D pattern, you will see that market even hasn't completed down the minor 618 extension. It even hasn't reached the minor extension. And that tells that market is not the bearish. And it tells that that was reaction on the oversold, and this was just minor bounce, and market hasn't continued to move lower. And it means that market right now mostly stands bullish. And it returned right back down to important trend line. And that's not typical for the bearish market. Bearish market shows retracement respect of the weekly oversold, corrected this condition, exit out from the oversold, and continue move lower. But this hasn't happened. That's the crucial moment. Right now, we have ABCD in progress to the upside, and in the larger perspective, we could get this butterfly, guys. You will see it in our weekly research on the analysis of the weekly time frame chart, if you would like to read it. So that could be the butterfly to the upside. Left wing, that could become the right wing. It's interesting that the 1618 extension of the butterfly stands approximately in the same area as the monthly target. So that's our long-term analysis. Now, what we should do right now, since we have the provement, the confirmation that current market is not the bearish, by the price action, by the technical analysis, by the fundamental background, based on the crude oil prices and on the safety report, we probably should start to search for chances for taking the long position. But at the same time, you see that on the daily chart, market stands at the trend line, at the daily overbought, and probably some bounce down will happen. So let's take a look at the 4-hour time frame chart. On the 4-hour time frame chart, we see that market simultaneously has completed this inner minor ABCD pattern right at the level on the daily. Okay, that also confirms that some bounce down should happen. First level is 125 or 6. That coincides with the weekly pivot point. But this level is not very interesting for us, guys, because market at overbought, and it suggests that probably retracement down should be a bit deeper. The next level that we will be watching for, and I think that will be our primary level for thinking about taking the position. This is really strong support cluster that includes pivot points. That's monthly pivot points, gold line, green line is the weekly pivot support one. We know that when market turns to the downward retracement on the bullish trend, weekly pivot support one should hold the retracement. And take a look, this area stands very close to the confidence support, 2430 area approximately. So at 124.30 will be our area where we'll be watching for buy signals, where we will be watching for opportunity to take long position. Maybe, guys, here we will get even the double repo sell. I do not know. We should see on Monday maybe, because thrust is not bad. In general, this market could form the double repo sell. Its target also approximately coincides with target of the double repo pattern. So that's our view on the Canadian dollar. In the long perspective, we still think that market should continue more higher. I mean, in terms of the currency pair, but not the Canadian. Canadian should drop lower. But in the short-term perspective, since market stands at the bottom and resistance, we expect some retracement before upward continuation. And the level where we'll be watching for opportunity to buy, and we'll start again to watch for Canadian, this will be around 124 area.